Good day, everybody. Happy Philippine Independence Day. For today's Financial Independence Day by Bookaka.com, I would like to talk about rare gems and the parabolic curve pattern. This is Simple Trader, and bear with me for the next 30 minutes as we discuss the parabolic curve pattern. This was first observed in the market 50 years ago. You will find many resources on the parabolic curve pattern online. What I would like to do today is to provide you with some examples of how this pattern is identified and traded. When buying interest in a specific name greatly overwhelms the market, a strong price movement happens. During this explosive price movement, these names are like rare gems that sparkle amid a lackluster market environment. They proceed at their own pace without regard for market conditions. These are what traders would refer to as outliers. They are the green tickers among the sea of red tickers during market consolidations. Traders who get the opportunity to ride these outliers are rewarded with exceptional profits at shorter periods of time. Therefore, we must follow these names with parabolic potential or look for breakout trading opportunities for those already in parabolic status. Do not waste your time on slow stocks. Momentum traders prefer parabolics because they provide greater profits in less time. So what is the parabolic curve? When prices arc upward at ever-increasing speed, they form a parabolic curve. The line that is used to trace out this pattern from the candlestick price action resembles a parabola. This is probably one of the most sought-after patterns because it is highly profitable at the shortest period of time. Here's what the parabolic curve pattern looks like. The parabolic curve pattern creates multiple basing out patterns. Each time a basing out pattern is completed, it results in an almost vertical move up to the next basing out pattern, thus creating a step-like formation. At the end of base 3, marked X, the price of the stock is estimated to double in a very short time. Base 4 occurs just before the peak, and then a sell point at the end of the run is manifested in a sudden break of the parabolic curve and prices drop quickly. A parabolic move happens at the end of extreme uptrends. And this pattern is seen when panic buying sets in and prices are driven almost to a vertical point. During a parabolic trend, there is a near complete absence of sellers, which creates a vacuum that permits nothing else but buying activity. Everybody who's in the trade feels like a genius. Now, as prices rise, more buyers flock in. Fear is conveniently left behind, and more traders rush into the trend just to get a piece of the action. If you want to buy a security that is parabolic, identify the base points as shown in the chart. Find the areas where the base points are about to end and make a run to the parabolic curve. Buy at those points with a short-term mindset. Because parabolic curves are extremely short-term, it is important to have a clearly defined exit strategy. The base points are areas to enter because there seems to be a lull in activity as prices move forward towards the parabolic curve. Now, when the base points approach the curve, a renewed round of buying takes place. Usually, the trade volumes at these buy areas rise very quickly, so it's best to buy in tranches as prices approach the curve. Now check out the parabolic curves on the following charts. Davin made a parabolic run whose base 1 was completed in September 2015. We find the 3 basing out patterns with the X at the end of base 3 at 216. By definition, in a parabolic curve, The target for a parabolic run is estimated at 2 times x or higher. From this base 3, it pivoted at x and price made a run up to 694. That is more than triple from x. After reaching its target, price had moved out of the parabolic curve and made a sideways action. This signaled the end of the parabolic run. Now, while prices might continue to trend up in the future, perhaps a consolidation pattern like a triangle or a falling wedge, this price movement is no longer part of the parabolic curve that was created from the 4 basing out patterns previously. Now, LMG chemicals also created 4 basing out patterns. Base 1 range was between 169 and 250. Then price surged and created a new box at base 2. This range is between 3 pesos and 250. Another price surge occurred towards 493 and based out again. The pivot point, or X, is at 388. From this X, price rallied towards the high at 860. Then it created the base 4. At this point, one might question whether this is a sell or a hold. But following the parabolic curve pattern, we hold as long as price is within the curve. Our trigger to sell is when price breaks across that curve. This break across the parabolic curve signals a long consolidation to follow, which is not characteristic of price that moves in a parabolic manner. So what you must take into consideration at this point is that LMG had already doubled its X and had therefore already reached its target price. Thus, the probability that the parabolic move will soon burst becomes likely. Price made one last push to try to break the 860 high, but it failed immediately, resulting in a violent drop from the high. Another security that had made strong parabolic moves is ALCO. Look how neatly the curves were drawn and how the basing out patterns became shorter in time period as price moved up the curve. This shortened time period for base 4 illustrates the FOMO concept, or the fear of missing out action of the market during parabolic movements. Price had doubled from its X at base 3 at 79 when it reached the high of 175. It became evident that the sell point was at the peak of 175 after it created a long red candle and broke across the parabolic curve. Note that these base counts are not absolute, since the rules on parabolic curves are not very specific. For example, in the chart of WPI, price was unable to reach the X estimated target price of 124. Price stopped at 108 and could not break this high the days after. So we assume that the parabolic phase is over for 2 reasons. First, from X, or the end of base 3, price had already almost doubled. Remember that target prices are not absolute but are merely guides. Price broke across the curve. This is a qualification for a parabolic curve near its end. Nonetheless, a new pattern may emerge that could push prices further up. However, it is not going to be part of the parabolic curve pattern anymore. IMI. This security had also been creating a parabolic curve pattern. It had created 4 basing out patterns. However, there's no confirmation yet whether the parabolic curve is over because price is inside the parabolic curve as of now. Price must make a vertical move up soon to avoid the risk of breaking the curve. From its base 3 with X at 770, the target for IMI is at 1540. Again, this is just an estimate. If price could not stay inside the curve, the parabolic run is in danger of ending. This needs confirmation in the coming days. Now, when you're trading a stock that has a parabolic curve pattern, you have to aim to exit on the next base point above touching the parabolic curve. It is best to be ready to sell when it's noticed that the parabolic curve is already at the vertical point. Or you could also use trail stops. With parabolic moves, We never know when the final top will arrive because of the frenzy of buying driving the move. But we know that the vertical moves cannot be sustained, and ultimately we can expect that the parabolic will collapse with prices falling as quickly as they advanced. Trying to pick the final top for this kind of move could be hazardous to your health, but being aware of the potential danger can be useful in managing positions. So what are the characteristics of a stock that is likely to become parabolic? Here are some warning signals. There are unusually high volumes prior to the move. There's a long consolidation of at least 1 year. There is an RSI bullish divergence. There's a bullish EMA crossover and an SMA 100 crossover. The daily or the weekly RSI is greater than 70. And price breaks above the 52-week high, the multi-year high, or the all-time high. Let's try to find these signals on the IMI chart prior to its parabolic move. 2 years prior to its move, volumes had been increasing from the average daily volume of less than 1 million to more than 10 million, and then a huge traded volume of 25 million shares as it attempted to break its previous high. However, this failed. These unusually high volumes are already a sign that the market is getting interested in IMI. Now the volume breakouts were also accompanied by RSI breakouts. IMI had been consolidating for 2 years within this box with a high of 729. And then a bullish divergence on the RSI was spotted. It tried to break out above this box, but it failed. The RSI also tried to break above 70, but it also failed to sustain it. Now, on February 2017, two things happened. It made a bullish EMA crossover at this point. It also broke above the SMA 100, and it stayed above that for the rest of the trading days. Now, RSI also crossed above 50 and stayed above that after many retests. Weeks later, RSI also went above 70 and thus was signaling a strong momentum moving forward. On the same week, it broke above the 2-year high. This 2-year high was at 940. Now at the high of 1358, IMI gains are almost doubled from its breakout above 729. Now let's look at another security. We have STI. Prior and during the parabolic move, we see unusually high volumes. Price consolidated within a box for 5 years. The high was at 117 in December 2012, and the low was at 36 in January 2016. Two bullish divergences were spotted during this consolidation, one in 2014 and the other in 2015. A bullish EMA crossover occurred on March 2016 along with a cross above SMA 100. RSI also broke above 50. Now price broke above the 117 box top. However, this breakout failed and prices dropped back towards the SMA 100 line. price was able to hold above that level. Now last week, it made another breakout attempt and succeeded to close above 123, which was above the previous resistance. It is now trading at its 5-year high. Now here's another security. We have BHI, or Boulevard Holdings Incorporated. It is another name that had shown huge spikes in volume during its consolidation. Most notable was this 2.7 billion shares traded in July 2016. Now prices consolidated between 122 high and 036 low from 2015. There were two bullish divergences spotted within the consolidation box. Now it tried to break above the 122 box top previously. However, that failed. RSI broke out as well, but also failed to hold above the RSI 50 level. Now this was the first attempt of RSI to break above 70. Now on March 2015, BHI made a bullish crossover on its EMA, signaling a buy. Price also crossed above the SMA 100 and stayed above that until present. If it is able to stay above this level, it may attempt to break box top at 122 once again, and if it does, then it is on track to meet its targets at 16 and 205. Of course, you must always observe your stop losses. These are targets. Prices can change anytime in the market. Prices can turn around anytime. Next, we have SSI. Again, we have these unusually high volumes. Last week, SSI was able to break above its previous range resistance on huge volumes. SSI consolidated within this box with a high of 461 for the past 1.5 years. There was also a smaller consolidation box within this big box with resistance at 375. It created bullish RSI divergence, and it also made a bullish crossover in its EMA. Then prices eventually was able to break above the SMA 100 line. Now last week, SSI was able to break above 3 pesos. The next resistance to break is 375. If successful, the next target is at 461, but be sure to monitor RSI for a breakout as well. If price breaks but not RSI, then the breakout could fail. If price and RSI both break out, then we expect a continuation of uptrend from SSI. Now lastly, we have CPM. Note again the huge volumes, signaling accumulation from 2016. Price consolidated within this box pattern for 4 years, from 2013 with a price high at 134 and a low at 44 cents. Now price also made 2 bullish divergences. RSI broke above 50. EMA also made a buy signal, and the price crossed above the SMA 100 line. A break above 134 could lead to the next target at 154. Now, when a trader is able to ride the parabolic runs from start to finish, this results in massive gains that make the traders feel like gold. But do not be complacent, because like they say about the market, what the market gives, the market takes away. In parabolic runs, the market could take everything back at the blink of an eye. Here are some warning signals that tell you that it is time to lock in those profits. First, you have the bearish candlestick following a strong move up. RSI makes lower highs and or drops below 70. RSI makes a bearish divergence. There's a bearish EMA crossover and price is detached from. Here are some examples. Vita was in a parabolic state until it started to show bearish signals that warned of a drop in prices. Here are those signals. First, there was a bearish candlestick. The closing price is lower than the day before. Therefore, this suggests momentum has slowed down. RSI made lower highs and dropped below 70. There was a bearish EMA crossover wherein the shorter-term moving average broke below the longer-term moving average. As you can see, the green line broke below the yellow line. There was a detachment in price. Price was detached from the green line. The price was detached from EMA4, showing disequilibrium. Now, corporation was also in a parabolic state previously until it started to show bearish signals that warned of a drop in prices. Similar to Vita, there's a bearish candlestick. The candle closed lower than the previous day, suggesting momentum had slowed down. RSI made lower highs and dropped below 70. RSI also showed a bearish divergence. There's a bearish EMA crossover, and the price was also detached from EMA4. So you can see the similarities in the sell signals between Vita and now, which is applicable to any security that is in parabolic state. So when bearish signals become evident in price charts, take profits. You could sell in tranches or sell all immediately once these signals are found. Remember that when a sell-off happens in a parabolic security, it happens very fast. So better be prepared or sell in batches. Do not be the clueless trader left holding the bag as prices drop. It is a very terrifying experience because when a parabolic run ends, it takes a very long time to recover, if at all. Alright, so thank you very much for watching Simple Traders webinar on rare gems and the parabolic curve pattern. I hope we all find that rare gem in the stock market. Good night, and thank you very much to Bookaka for this opportunity to hold this webinar today. Goodbye, and have a nice day.